Good day. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is for Monday, the 15th of March, 2021, about 6:15 p.m. Central Time. You know, I'm looking at the markets here, and you have to understand this is a very big week in economic data. You have the European Central Bank just last week. You've got the U.S. Bank. We go into the two-day meeting at the FOMC with Chair Powell, Fed Chair Powell on Wednesday, giving his press conference, the statement as to what our policy is going to be. I think we have the Bank of Japan at the end of the week, and I think Bank of England fits in here somewhere too. I'd have to look up that one, but I'm pretty sure about the Bank of Japan. And what I'm expecting is everybody's looking to see what the Fed does or doesn't do about these rising rates in the back end. More important, they're probably going to look at the dot plot to get an idea of where the market's at. And remember, we haven't had a real update from the Fed, I don't think, since December. So we're looking for a bit more data there too. And there's a lot to talk about because if you go back to December, we're not where we are now. We're almost 20% of the U.S. population has had a vaccine shot. That's very big. I heard a statement today that 97% of those that get the first shot get the second. Power. That's good. But we're here to talk about the metal markets, and the metals will look at all this. They're going to look at the economic recovery, what's going on in COVID. If you look at Europe, they're going down into shutdowns again, the lockdowns, be it Italy, France, Germany. I mean, it's just getting worse. Poland, I understand, has got some areas that it's going to possibly lock down right now. Then you get the smaller Baltic states. They're having problems. So we are ahead of them. And that's one of the reasons you're getting a bid here in the dollar. Our economy's opening and they're closing in Europe one more time, and that affects gold and markets like that. As you can see on a weekly area chart of just closing prices, you're under the 18-week moving average. That keeps the bias of the market down. The first resistance, if you had a hard rally, is about $90 higher in the 18-13-60 level, the 18-week moving average of closes. Remember, this chart is just of closes, not of highs and lows. When we get to the April gold on the bar chart, there's an important number here that I could see. The most recent high in this market was just recently at 1738. Right here, and as you can see, that was made on Thursday, March 11th. Now, if the market can get through that number, we get an interesting pattern. Let me show why. When I bring on the swing line, it would change everything. You'd suddenly have higher highs, higher lows, possibly in that market. Gets to be a bit more exciting there. Right now, who's in control? The bears. You have a pattern that's all the way from up here. Lower highs, I think you'd agree with that. It is. Lower lows. Then we had this one move where you had an outside day down, and then you took that out and the market put on a rally. Now from that day, what am I expecting in the market? I'll show you. If you look at the 18-day average of closes, the odds are strong that when you have an outside day down, and you take out that day's high, until you go through the most recent low, it's my rule of thumb, the market is going to make a run at the 18-day average of closes. I'm completely wrong if you get right back under that number. And that is what's going on to a pretty quick degree. The shorter in duration occurs, the more powerful the rally, and it gets to a higher number. But each day that goes by, this number slips. Why? Well, if you look back here, you remember it's an 18-day average. You're losing one of those days and putting the current value in. But it's still an interesting part to it. And I'm looking to see if the 1738 level can be hit. I then look at Bollinger Bands, and I have reason to believe that the market, as I said, it's come down. It's actually come down from near $2,000 and all the way down here, and suddenly the sideways action. You didn't have that action up until right here. And in here, it looks similar to what you've got. It failed, and then it resumed the downside. I don't know if it'll fail or not, but I do see that the market's got a shot here for the first time in a while to possibly change the direction of the market. When I take a look at the slow stochastics, I'm even more enamored with my thought process. You lost the embedded reading right here. And when you lost it, the market was 1716.90. You kept it lost. That put the 18-day average in this in play also. But I want you to watch what happens if you don't get back to that 18-day average in a reasonable amount of time. This was confirmed loss on March 10th. We're only at the 15th. The market was 1750.290 as the downside, as the upside target. You had the combination with that of losing of having an outside day down, and you took that day's high out. So I've got two elements here. Next day, 1747. Next day, 1742. 40, 50, and now 38. So you've fallen $14. So when you put these on, what I cannot tell you is the speed that it's going to get to it at. I wish I could tell you for sure that it was going to hit that number. But I can tell you that the odds strongly favor it's going to make a run at it. And win, lose, or draw, it's doing exactly that right now. I would look for this market to encounter that resistance at 1738. In the gold-silver ratio, you can see that you're just hugging this 18-day average of closes. When I step over to the silver itself, you still have the pattern of lower highs, but now you have higher lows. And what did the market do? It's really been hugging here and playing at an important average, which is the 100-day average of closes. The market seems to like that average. Different markets like different averages. You did not get down to this gray one, which is the 200-day average. So it's been enamored with that. Where could the market be headed? Well, the resistance is 2656.5, 2657, the 18-day average of closes. If you close over that number for, for the first time since the end of February, I would be saying the market's back into an uptrend. Right now it's fighting. It's out of the downtrend, but it hasn't begun a new trend. In the copper market, the one thing I've pointed out to you for 2 weeks now was I thought that what we were going to do is start bringing in just what these black lines are doing, the Bollinger Band wrapping their arms around the market, and what the market's done in the meantime is hug the 18-day average of closes. That's neither bullish nor bearish. The market has got a broad range, making it hard. If you bought the market at 412.80, let's call it, do you really want to risk back to the one tick under the most recent low of 397.20? The trend is up, but it's very hard. So when consolidation happens after a huge vertical price rise, where a market went from 350 almost up 80 cents, it's got to consolidate that and figure, did it get too high? Is that it? Or is this market consolidating for another stab to the upside? The bulls are in control. The trend is up. The bias is up, and momentum at the very worst is flat to pointing slightly higher. In the platinum market, we've gotten up high enough here where we have higher, as you can see, higher lows, higher highs, the momentum of the market pushing on that upside. The trend of the market has turned back up. I think the pros will be buyers in the 1205.60 level, but it's a big risk, back down to 1172. You're getting these big risks in the market, bigger than normal, because you've had a series of moves that have been rather dramatic. You've gone in this market from nearly 1350 in one swoop down to almost 1100, and now you're back up into the 1218 zone. That's not normal. You'd normally trade more in these ranges where you can get a better handle on the risk. Just don't have it. That doesn't mean you can't call trends, or try to at least, and see what happens. You break this idea of the uptrend if you get under 1172. The potential could be back to wherever the upper Bollinger Band is in that 1293 area. In the palladium market, you got up high enough today where I should have moved these arrows. You now have a higher high and a lower low. You've come out of the downtrend. You're sideways with a big broad swath there. I don't see anything to do on that market. And the dollar index is overbought. trying to correct a bit, going into an FOMC meeting, and the question is what happens with the 18 and the 100-day average of closes. You do realize, and if you don't, let me point it out to you, that if the 18-day average gets up and over the 100, you get a bullish crossover. You put together higher U.S. rates, you put together with it the fact of we're doing so much better in COVID vaccinations, our decline in the COVID cases versus Europe and some other economies, that could be the case. And the dollar surprises people and moves even back into the uptrend until Europe is able to get things more under control. That's very real possibility as to what's going to happen here. I talk about this and a lot more early in the morning. And by the way, let me share this with you. I might be able to even put out these updates a bit earlier in the morning. We're moving my production, the production. The recording will stay on my computer. The production and the rendering is moving to our big-time computer. I'm going to do it the first time tomorrow. Now, I've got to jump between two computers in my office here, but that's seats apart. That's not going to be a problem. And if I'm right, I save maybe 20, 30 minutes in rendering time alone. That'll put these videos out much earlier. Remember, I record them like that. Each one's about 20 minutes long. So when I'm recording them for you, I'm covering all these markets in a certain way. I then post them to the website. I can't change the time that the website player has to render it, but it's nowhere near as long as the raw rendering of what I'm doing. So if you'd like to see what I do, get a feel for it, because it's where I say, I want you to buy here. I want you to sell here. This is what I'm saying. I mean, you'll hear me quite aggressive, a lot of trades. All you need to do is go to our website. You'll see under the keyword, when you go to it, research, everything is explained there, inexpensive as can be. I'm Ira Epstein. It's going to be an active week. Hope to see you all week long. Take care.